Okay, so how the fuck I get rid of this? Alright. What am I gonna be talking about today? This is my strategy right now that I've been seeing, and the trade that I took with this strategy at the beginning of the week. So let's do this. Let's go to the very top. What is my strategy? Literally the very first strategy I was ever taught. Literally a fucking fit basics, like the most basic way I'm gonna run it down is 15-minute liquidity sweep and then a 1-minute break. And if I want to, a 1-minute retrace. That is the most basic gist of it. And there's quite frankly a little bit more, maybe one or two things more into it. That's not that complicated. I've been doing it. I did it back then, and yeah, it worked. And then when I started watching more TGR videos, trying to add more confluences, man, I guess it was a lot of, I kind of overthought a lot of things, because I had more confluences. I was looking at more things on the chart, looking at all the different time frames, and maybe I was the strategy I did way back in the summer, way back when school started of senior year. Maybe I could have stuck with that strategy because I was using it, and I was kicking ass with it. And I'm not saying TGR strategy is wrong. I'm saying whatever he saw, whatever TJR saw, it was working for him and he was able to do it. It's just I wasn't seeing the same things as him, and that's why I guess I wasn't winning, because I wasn't seeing, number one, I wasn't seeing the same things as him. And the things that I saw and I did try to do, they just didn't win for me. So what am I looking for first? Basic gist of it. 1, 15. I guess any time frame. So 15-minute. I'm just saying 15-minute, as in that's the lowest time frame I'll accept liquidity from. 15-minute, 1 hour, 4 hour liquidity swept. Alright, that's the first thing I'm looking for. Second thing, 1-minute break. Boom. And I enter, and it's literally been fucking working. And it's not easy as this looks, bro. So first off, I'm gonna run it back from the very, very beginning on what I do when I look at the charts. First thing I do, analyze market. I don't analyze. I do go on the daily, sometimes a weekly, depending if it's the beginning of the week or end of the week. I do go on a daily, I do go on a 4-hour, and I do go on an hourly, and I try to predict, hey, where's price gonna go within those time frames. So I guess one is find bias. Whether that be if I'm gonna go long or if I'm gonna go short, a bullish bias or a bearish bias. Find bias. All right. After I find my bias, what do I look for? I look for. Here's the best way I can explain it for me, because this is what I see that's been working for me. I look for a liquidity sweep. Shit. 2. Liquid. Hold on. I don't like how this is little. Shit. 20. Liquidity sweep on a 15 time frame or higher. I look for a liquidity sweep on a 15-minute time frame or higher. That is in line with some sort of high time frame confluence, whether that be a 4-hour for fair value gap, 4-hour equilibrium, daily equilibrium, hourly order block. Well, whichever one it is, I look for it. Basically, on a high. Oh, wait. So it's a liquidity sweep on a 15-minute time frame or higher that's in line with a hourly or higher confluence. And the main ones I'm using, because like these are like working like money for me. Main ones is either a fair value gap and slash oopsie daisies or equilibrium. Most of the time these two are like together when I look for like a retracement. Let me start look for like an hourly confluence. Okay. And you know, once I see that hit, once I see that you know, that 15-minute liquidity get hit, that's in line with one of the hourlies, fair value gap or equilibriums, or one of the confluences. What I look for next, I go down to the 1 minute time frame. 1 minute, and I enter, or I look for a break a structure on the 1 min time frame. And yeah, I can enter, but like just to be safe, I like to wait for just like another confluence, whether that be fair value gap or a local equilibrium on the 1 minute. And yeah, once price breaks above that, so retrace on 1 minute, whether that be equilibrium, fair value gap, or order block, and wait for a candle closure like I'm waiting for a candle closure out of that confluence. So if I have a bullish bias, I'm gonna wait for a bull candle to close. Does that make sense? That makes sense. Wait for a candle closure out of that confluence aligned with bias. Alright? And this usually gives me a good TP. Because what I've been seeing is price literally like, this is what I've been seeing, me personally. Like say you're like on the if you like bet price, like if you're like, oh fuck, I can't even talk, bro. Because I've been seeing this. It's much easier like to explain once it's like right in my eyes. So I guess I'm just gonna look for it. Okay, 4 hour. Okay, let's ignore this fucking candle or this little line right here. So let's pretend that we are right here, right? Or let's just say like we're right here, right? And all these candles after this red line, they don't exist because it is currently 21 o'clock on Monday of July 22nd, 2024. Say we're right here, right? And if I'm assuming, hey, because this is what I see a lot, we're on the 4 hour, right? I think, hey, time's going to come up into this 4 hour and fill it well in this fair value gap. Fill it up. Pause. Damn it, bro. Shit sounds okay. And, you know, with these swings, taking out equilibrium as well. If my shit is correct, bro, and I say, hey, price comes up to this hourly confluence, and I'm going to look for a break, a 1 minute break, and I'm going to enter off that. Most likely, like what I've seen a lot is, if your bias is correct, you can enter off the 1 minute because price will follow that. That's what I've been seeing. I've been doing it, and it's like been working. So I guess like my bias has to be correct, you know. And it kind of like is a guess because that's what fucking like trading is, you know. Like you don't know, there's no like certain outcome of like in trading, you know. It's just like a guess. Like for example, if you had a bullish bias, but you're like, I think price is going to come up into this fair value gap, which hey, look, it did, and then go lower, which it did. I can enter off the 1 minute, and I bet you the 1 minute broke down and everything went fucking falling. That's what I'm fucking seeing. Alright? Retrace at the 1 minute. Yeah. Alright? So to better explain that, let's go to the trade I took on Monday. I only took one. What is today? Today's Saturday. I only took one trade this entire week, and it was on Monday. Because the entire week, I know the entire week I was like busy because I had orientation because of like college and shit. What the fuck? Okay. Monday 22. Yeah. Tuesday I was gone. Wednesday I was gone. Thursday. Did I trade Thursday? No. I don't think I traded Thursday. Because I did not trade Thursday. Friday I did look to trade, but I didn't see anything I liked. I mean, there was a good setup. Actually, no, there wasn't. It was low-key like sideways as fuck. Okay, so I only traded Monday and I won using this strategy, and I've used this strategy back then a lot, and I've won a lot. So let's go to the 5:15 minute. Drag this red candle to 8:30. Okay. Monday, no news Monday. All right. So if we go on a 4 hour, so what I do personally, okay, since it's like a new week, Monday's a new week started. Hold up. You can't see jack shit. Never mind. I'm not gonna go on a week because I don't remember what fucking happened. We're gonna go on a daily. All right. This was the day I was correct. So price at one point before like this big purple candle was up, for this big bullish candle was formed. It at one point came. Price was like at one point down all the way over here before market opened. All right. And yeah, what I saw was we've been like, price has been dumping recently. You know, prices have been dropping because there's been a lot of like security breaches. I don't really know like what's happening, but there's like some security breaches. So like all the technology stocks and shit that's under the S&P, they were all like dumping. And then you know, Trump got shot too. I don't even know if that's gonna. I don't know if Trump getting shot affects the market dumping. But I know for sure like there was like some like security breach or some shit. I don't really remember. And it caused like all the technology stocks and S&P to cause this thing to drop. And I was like, yo, we need to retrace up because we've been going down. Look, we broke structure right here. Sweep. I don't know what sweep. Yeah, sweep right here. We broke down. That's how market moves. How does market move after we get a break structure? Most likely a retracement. What did I mark out? Wing. Wing. I marked out that. So first thing I marked out was equilibrium because I feel like equilibrium is my like holy grail for me. Because like I swear it works. So I win a lot and I use equilibrium. And fair value gap. Fair value gap, yeah, it's pretty good too. My favorite confluences are equilibrium and fair value gap because when those two combine together, when I use combine together, holy fuck, they work so well. I had those two marked out, right? Keep in mind, we don't, what is it I'm talking about? This purple candle hasn't been formed yet because, you know, we're still like down here because the day hasn't started, the market hasn't opened yet. We're still like down in this like area-ish, right? Somewhere down here. So this fair value gap hasn't been hit yet, right? So my bias is, hey, we're going to be bullish for this day. And what am I going to look for? I'm expecting for price to go up into this fair value gap or hit this equilibrium or this order block right here. This like whole order block area right here. Which I don't really use order block because I feel like order block's like a very like big price range. I feel like I only use order block on like 1 minute time frames for entries. Because I don't really use order blocks for like biases. But yeah, I was like, hey, we're probably gonna be price is probably gonna. I'm assuming price is gonna be bullish, so I can go up into this fair value gap, into this equilibrium, right? So my overall bias for today was bullish. All right. We were bearish on the 4 hour before market opened. We were bearish on the 4 hour. And then on the hourly, I think we were bullish on the hourly. Yeah, we were bullish on the hourly. Alright, good. And I was like, alright, shit, looks perfect to me. What am I going to look for? What did I look for? What did I look for? What did I look for? I looked for this hourly. I remember. I looked for this hourly equilibrium from this swing low to that swing high. And I'm pretty sure I could have done this one because that's like a little low. Yeah, I could have done that if I really wanted to. But I didn't do that. I did this one just simply because there's a low right here. I did it from these swing lows to those swing highs. Oopsies daisies. Alright, and then what else was here that I saw? I saw, hey, look, a hourly fair value gap. Okay. So let's pretend, remember, that we're right, like we're speaking in the time of the way this red candle is. It's 8 a.m. None of these candles here after the red line have been formed. So I don't know what the fuck is going on. I mean, I do know what the fuck's. I mean, like fuck. I can't talk. Never mind. All these candles over here in this area after this red line, they haven't been formed yet because we're talking as if it's 8 a.m. All right. So what am I looking for? I'm looking for, hey, I'm going to assume. Let's go to 15 minute. Because first I gotta point out my liquidity. All right. I'm going to assume when market opens, it's going to come down into this equilibrium and this fair value gap, this and or this fair value gap, then go higher into this daily fair value gap. So yeah, I had a bullish bias, all right, and we had liquidity everywhere on the 15 minute. We had this low. We had give me this bitch, and then we had this low, and then we had another 15 minute low. Right here and right here, but I entered off of this one right there. So also this 15 minute low was also a. I hate when fucking trade, bro. Why does trading you do this shit, bro? Oh, never mind. Yeah, that 15 minute liquidity is just 15 minute liquidity. Okay, so before market opened, I was like, for me to enter, as I'm gonna have to see either a hit of this equilibrium or this fair value gap. Already said that. All right, so you can go to the daily fair value gap. All right, market opens. What's it do? Breaks up on the 15 minute and goes into this daily fair value gap. Like taps into it, and it also sweeps out these. These are hourly highs right here. This hourly high and this hourly high. And I remember I was like, oh shit, should I switch my bias? And the reason, like I'm dead ass, either for me to switch my bias, I forgot what I had to do. I remember I had to see something. It was either I'm going to switch my bias, which I'm probably not going to do because I'm probably just going to not trade at all because originally I had a bullish bias. For me to switch my bias, there has to be a million confluences. And I'm like, oh yeah, it's an obvious bear day. It's either me, I'm going to, switch my bias or just not trade at all. But the reason I took a trade, the reason I waited for this area to get hit, it's because this is a whole daily fair value gap, dude. And like, when I'm looking at this, where like the moment I just had, I was like, maybe I should still continue to trade, was right here, at this black candle. All right, this black candle, look, put 2 inches inside of her, bro. Look, it barely tapped into it. It like barely tapped into it. So I went long. I decided to, trade or like look for a trade because like, you know what? If price wants to continue lower and lower today, I feel like it would have to fill this fair value gap even more. Because look, it barely like tapped in. It barely tapped into it, bro. It barely tapped into it, you know what I mean, football? So I was like, you know what? Let's look for a long. This liquidity gets swept. This liquidity gets swept. Look what else gets hit. This equilibrium and this fair value gap on the hourly. So I'm like, awesome sauce. What do? I'm in the 1 minute, bruv. Fuck, bro. Damn, why does TradingView do this? It just spawns you in the middle of nowhere, bro. It's like when you die in Minecraft and you don't have a spawn set point. Set spawn point. Alright. Once I saw that, right, I was like, oh, look, that's perfect ass field, bro. I looked for a 1-minute break to the upside. And I was like, let's get into it. We get a break right there. Alright. And I feel like I could have not. Personally, I would not have entered right there. Maybe had stopped right here. Probably would have had my first take profit like at this high. But me personally, I like to like wait for an extra little more confirmation. So what did I look for? First off, I looked for this equilibrium fill, which yeah, it did fill. And then what else I look for? My two fucking favorites. This fair value gap. And I guess you can say like this fair value gap got filled as well. This one down here. Yeah, I guess you can. Okay, it didn't really get filled. It just tapped into the same. Yeah, it's just at the same level. This one got failed, and I was like, you know what? I'm gonna wait. All right, once this area gets hit, what I look for? Motherfucking break a 1-minute closure out of that confluences that's along with my bias. So, you know, here we have that candle closure that closed out of that confluence, that closed out of this fair value gap in equilibrium, and it closed bullish. So I entered off of this candle right here, and I had my stop. I think I had my stops down here. All right. And then the first area I targeted, first take profit was fuck, what was my first take profit? Okay, I'm lying. I think my stop. Oh, that's right. My stop loss was. I remember this because my stop loss was right here. Because I remember there's like a million lines like this half point mark. This right. Yeah. Okay. My stop loss. My stop loss was right here. I remember. It wasn't down here. It was right here. I'm sorry. Pardon me. Please don't get mad at me. My first take profit was the end of this 1 minute fair value gap. Then my last one was this high all the way up here. And yeah, it gets hit. You know what I mean, by? You know, price gets hit, and all my take profits get hit, and yeah, I won. I'm not trading on a real account. First off, I'm trading on a demo account. If I'm ever looking back in this, and many years from now, I'm on a fucking demo account because I'm not profitable yet. I'm on a demo account. How much did I win this day? You might be asking. 1.5k. 1.5k on a demo account. So $0 in real life. But I gained some knowledge, bro. I gained some experience. So that's amazing. Yeah. That hit only took me about 9:19 to like 30 minutes, bro. That got hit. That's what I saw on Monday, following my strategy, and it worked amazingly, you know. And like, yeah, to be honest, I could have done the same thing too. If it hit this area, if I was like, yeah, price is gonna have to hit this area to go lower, I literally could have done the same thing too. Cause look, it swept the hourly highs and filled this daily like fair value gap. You could have entered off this 1 minute break right here, bro. Boom, and then look, it dumps, bro. But like me personally, I was like, nah, it's gonna go higher because we put 2 inches into her. She's not even wet, you know what I mean? You know what I mean, boy? What way? Yeah, that's what I fucking saw. And then let's go to Friday. 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 Okay, I'm gonna put my candle at 9 because I remember we had news that came out at 9. No, I'm gonna put one at 8:30. 8:30, put it at 8:30. Oh crap, my mouse. 30. And then another one at 9 for when news comes out. We're gonna make this one that one. I remember this because this was literally like 2 days ago. I mean, sorry, yesterday, bro. I remember this because what was I looking on? Oh, I was looking on the weekly, and I saw we had equilibrium hit on the weekly. We had this within that, and I saw like on Friday, we just tapped into the equilibrium, and there was also this big ass fair value gap too on the weekly that we tapped into. So I was like, we're gonna go long, but I'm not just gonna enter for 1 minute because I don't know if price wants to go lower, because we're kind of fucking dumping. So for me to go long, I was gonna wait on a 4-hour break before market opened to the upside. We did get that 4-hour break right here. So I was like, alright, maybe it is a good day to trade. Like I said, I did not trade this day. Simply because, why did I not trade? Oh yeah, my hourly confluence didn't get hit, So, here's market. What the hell? Wait. Which one was my hourly confluence? Oh, I remember it was a hourly fair value gap. Alright. It was that right there. And did I mark out equilibrium in the 4-hour? I did not mark out any equilibrium. It was a low-key a sideways ass day. I wasn't really sure about entering. And if I had to enter, I was for sure gonna like use 1 minute, and I was just gonna use more confluences. But I know for sure I wanted one at this 1 minute. At this 1 hour. I wanted price to go on this 1 hour fair value gap. And then I waited for, hey, what? A sweep of this. Oh, I remember. The hourly fair value gap did get hit. But I wanted a sweep of some lows, of a 15-minute low, which is one we had. Okay, let me close this fucking candle. Which we had, which was made when the market opened. And the reason I didn't enter at 9, because where's 9? The reason I didn't enter at 9, because number one, first off, it was mad sideways. I don't even think this was a good day to fucking trade. And two, what I've noticed a lot, like when I've lost a lot because of news or some shit, what I notice is if I want to go, like for in this instance, say I want to go long, right, and I went long, I notice a lot of the times price will end up going down and sweeping liquidity that was made, like a 15-minute low that was made either when market was made or after when market was made. So that's why I waited for this low to get swept first before I could enter, because this was made when market opened. And we did have this low too right here that was made when, like, a little bit after when market was opened, because I notice it happens a lot. I didn't enter because I was just mainly looking towards this one just to be like extra safe, because it was also like in line with this hourly fair value gap. And I know you could like, I know like this did go down into it, but I really waited for this one to be safe. But like, let's say this one did get hit, I would have entered off the 1 minute breaker structure to the upside, which I was watching. Yeah, we did see that somewhere. Yeah, we did see it on these. I remember those 15-minute lows that I was like, I don't want to enter off of. This was a 15-minute low that I didn't want to enter off of because I wanted to enter off this 15-minute low. This gets swept, and then we break up right here. We get the breaker right there. And me personally, I would not have entered just simply off the break because we are mad sideways, and it's like what are we doing? There's a lot of like no movement because maybe price wanted to go lower, price wanted to go higher. I honestly didn't know. So I was like, alright, what if I entered off of this, what would I would have waited for? I literally just looked for equilibrium because you couldn't find anything in these big wick ass candles. So I waited for equilibrium because I remember I marked this out even though I didn't take the trade. I waited for equilibrium, and then I was like, okay, I would have entered off of this candle closure, bullish candle closure above it, with my stops where? My stops right there. First take profit. I was thinking of putting, that's the thing, because there's like so many like things where you can put like things, you know? Like maybe my first take profit should have been right there, but I was like, no, because that's very low. So it could have been this one. This would have been my first take profit. And then after that, I would have looked for this high. Which they do end up getting hit, but I didn't trade because my liquidity that I was looking for didn't get hit. You know, better safe than sorry, you know, because if I lost, you know, that would have been unfortunate, and I would have been like, damn, maybe I should have waited for this. So, no trades is better than a loss. I'd rather make no money than lose money. So, good thing I didn't trade on Friday. Alright, I think that's it. This is going on my YouTube because I don't want my strategy going into my trade recap folder with 100 fucking videos.